Welcome to a story that's quietly reshaping the global silver market. A story of hundreds of millions of ounces moving across oceans, draining vaults, and creating a disconnect between what you see on paper and what's actually happening on the ground. If you think silver is just a precious metal for investment or jewelry, think again. Today, silver is critical infrastructure. From solar panels to electric vehicles, from semiconductors to AI data centers, this metal is literally powering the modern world. And right now, India is at the center of a historic silver surge, a surge that could reshape global supply chains, force physical premiums to explode, and challenge the very way markets measure value. To understand what's happening, we need to start with the basics of silver markets. There are two kinds of silver markets: paper silver and physical silver. Paper silver includes futures contracts, ETFs, and other financial instruments that represent silver but don't involve taking physical delivery. COMEX, based in New York, is the center of this paper trading world. Traders here often speculate on silver prices, creating enormous daily volumes of contracts. Physical silver, on the other hand, is the real metal bars, coins, and industrial-grade material that can be melted, manufactured, and permanently removed from circulation. Here's the catch: the global market has been telling two very different stories. On paper, silver prices in the West appear stable, sometimes even weak. But in the physical market, especially in India, demand is surging, premiums are skyrocketing, and vaults are being drained at an unprecedented rate. Let's talk about London, home to the LBMA vaults, one of the largest silver storage networks in the world. These vaults have historically been a key source of liquidity, supplying silver for investors and industry alike. But today, they are being emptied faster than ever, as hundreds of millions of ounces flow toward India, much of it never to return. Why India? To understand, we need to examine both culture and industry. India is not only the world's largest buyer of silver for weddings and jewelry, but it's also aggressively securing supply for solar panels, EVs, and other high-tech industries. In recent years, India's imports of silver have almost doubled compared to 2023, and this surge shows no signs of slowing. This demand isn't speculative, it's structural, driven by real industrial and cultural needs. And once silver enters India, it's effectively removed from the global market, melted and manufactured into products that won't be sold back internationally. This is why we're seeing what some analysts are calling a structural supply crisis. Lease rates for silver are spiking. Air freight is being used at extreme cost. Vault inventories around the world are falling. And yet, Western paper markets continue to trade as if nothing has changed. To put it simply, paper silver is telling one story, physical silver is telling another. And if you're only watching the COMEX charts or ETFs, you might not even realize how deep this crisis could go. Silver is no longer just a metal you store in a safe or invest in for potential gains. It's critical for the infrastructure of the 21st century. Solar panels use silver in their photovoltaic cells. Electric vehicles rely on silver in batteries and electronics. Semiconductor chips, AI data centers, and 5G networks all require silver for their circuits and conductors. And India, recognizing this, is stockpiling aggressively, ensuring its factories and industries are supplied before the global market even catches up. This raises a fundamental question for investors, industry leaders, and policymakers alike. Are you watching paper prices, or are you tracking physical supply? Because the next wave of silver shocks won't show up on COMEX charts. It will show up in empty vaults, rising premiums, and stalled factories. In this series, we'll explore the many forces driving this historic movement of silver. How India's wedding economy alone moves hundreds of millions of ounces annually. How the solar boom and industrial demand are creating unprecedented needs. How physical silver is being permanently removed from global circulation. Why 2026 could be a breaking point for the silver market. And most importantly, we'll reveal how the disconnect between paper and physical silver is creating a risk that could impact investors, industries, and even governments worldwide. So buckle up, because what you're about to see isn't just a market trend, it's a structural shift in one of the world's most important commodities. India, a land of rich traditions, vibrant festivals, and deep cultural ties. And nowhere is this more evident than in its relationship with silver. For centuries, silver has been more than just a metal here. It is wealth, status, security, and celebration, all rolled into one. Every year, India hosts millions of weddings. Each wedding is not just a ceremony, it is a monumental economic event, a celebration that involves lavish rituals, gifts, and jewelry, and above all, silver. The Indian wedding economy is staggering. Families spend billions of dollars each year on weddings, and silver is at the core of these expenditures. Silver jewelry is gifted, worn, and ceremonially exchanged, representing prosperity, tradition, and family honor. But what does this mean for the global silver market? To put it in perspective, India alone consumes hundreds of millions of ounces of silver annually, a volume that dwarfs almost every other country. And it's not just gold that draws attention, silver has quietly become the preferred metal for middle-class and high-end weddings alike. Let's break it down. The demand for silver in Indian weddings comes in several forms. Jewelry for the bride and groom, necklaces, bangles, earrings, and rings, often weighing several kilograms collectively. Gifts to family and friends, Silver coins and small ornaments are gifted in traditional ceremonies, symbolizing blessings and good fortune. Wedding decor and rituals. Many ceremonies use silver items for ritualistic purposes, including platters, utensils, and ceremonial statues. When we add all of these together, the numbers are staggering. Consider this: in 2023, India imported roughly 5,000 metric tons of silver, and recent estimates suggest that volume is almost double in 2025. This is a level of demand that has never been seen in modern history, and it is entirely driven by cultural practices. It's important to understand why silver is favored over gold in many of these cases. Gold is certainly prestigious, but silver is accessible, versatile, and deeply symbolic. It represents purity and prosperity, making it ideal for ceremonial purposes. Moreover, silver's relatively lower cost compared to gold allows families to purchase larger quantities, making it a practical choice for widespread gifting. This cultural preference has a major impact on global markets. When hundreds of millions of ounces flow into India every year, physical silver is effectively removed from circulation, as much of it is melted down, manufactured into jewelry, and sold domestically. Unlike paper silver, this metal never returns to the COMEX or LBMA vaults. The Indian wedding economy doesn't just influence domestic consumption. It has created a ripple effect across global supply chains. Suppliers in Mexico, Peru, and Australia, countries that produce the majority of the world's silver, are feeling the pressure. Exporters are adjusting pricing, shipping priorities, and production schedules to meet India's insatiable demand. This demand also contributes to the disconnect between paper and physical markets. In Western markets, silver may appear stable, with futures and ETFs trading within narrow ranges. But in India, physical premiums can reach 15–18% above international spot prices, sometimes even higher during wedding seasons. Why such a premium? There are several factors. Urgency: families need silver for specific dates in wedding calendars. Missing these dates isn't an option. Supply chain costs: air freight is increasingly used to secure timely deliveries. Limited availability: global production is finite, and India's demand often absorbs large portions of available supply. Now let's zoom in on regional patterns. The states of Gujarat, Rajasthan, Uttar Pradesh, and Maharashtra are particularly significant. These regions host some of the largest weddings in India and have deeply rooted traditions involving silver. Festivals like Diwali and Akshaya Tritiya further amplify demand, as silver is purchased as gifts, for rituals, and for investment purposes. Interestingly, silver also serves as a hedge against inflation. During periods of economic uncertainty, families prefer silver coins and small bars as safe, tangible assets. This adds an additional layer of demand beyond weddings, further tightening the physical market. But India's wedding-driven demand is only part of the story. In recent years, the growth of the urban middle class has amplified silver consumption. Higher disposable incomes mean larger weddings, more elaborate gifting, and increased demand for high-quality silver jewelry. This trend is not slowing down; in fact, it's accelerating. To summarize, India's wedding economy alone accounts for hundreds of millions of ounces of silver demand annually. Silver is culturally preferred over gold for its symbolism, accessibility, and utility. Physical silver flowing into India is effectively removed from the global supply, never to return to vaults. Premiums in India are significantly higher than international spot prices, creating a persistent global supply squeeze. Urbanization, rising incomes, and festival seasons are driving demand even higher. In the next part of this series, we'll explore how India's solar boom and industrial demand are further intensifying silver consumption. While weddings account for cultural demand, industry is creating a demand tsunami, one that could have far-reaching consequences for global tech supply chains. Stay with us as we dive deeper into the forces that are reshaping the global silver market, one wedding, one factory, and 1 megawatt of solar power at a time. While India's wedding economy drives enormous silver demand from tradition and culture, there is another force quietly reshaping the market industry. Specifically, India's solar energy revolution. Silver has always had industrial applications, but the modern world has elevated it to critical infrastructure status. Its unique electrical conductivity and reflective properties make it irreplaceable in high-tech industries, and nowhere is this more evident than in solar energy. India's government has made renewable energy a national priority, aiming to reduce dependency on fossil fuels and expand solar power capacity. As part of this vision, the country is building gigafactories to manufacture solar panels at scale. These factories require massive quantities of silver. To put it in numbers, each solar panel contains roughly 20 grams of silver, used in the photovoltaic cells that convert sunlight into electricity. Multiply that by millions of panels, and suddenly we're talking about hundreds of tons of silver annually, just for solar energy. India's solar expansion isn't just ambitious, it's unprecedented in scale. By 2030, India plans to have over 300 gigawatts of solar capacity, a feat that will make it one of the largest consumers of silver in the world. And here's the key point: the silver imported for solar panels is permanently consumed. Once it's incorporated into a photovoltaic cell, it doesn't return to the market. Unlike paper silver or even silver in jewelry, which can be melted down later, industrial silver in solar panels is effectively removed from global circulation for decades. But solar panels are just the beginning. Silver is also essential in other industrial sectors. Consider electric vehicle silver is used in batteries, motors, and electronics for EVs, semiconductors, and AI data centers. Silver's conductivity is critical for high-performance circuits. 5G networks, base stations, antennas, and wiring all rely on silver components. In each of these sectors, demand is exploding, and India is positioning itself to secure supply before factories even come online. To satisfy this industrial demand, India is importing silver at unprecedented rates. Recent estimates show that India's industrial imports now exceed wedding-related purchases, reflecting the dual forces driving silver scarcity culture and technology. This has several critical implications for global markets. Vault depletion. LBMA and COMEX vaults are being drained as suppliers redirect silver to India. Rising premiums. Physical silver prices in India are 10–18% above international spot prices, reflecting urgency and scarcity. Supply chain bottlenecks. Air freight is increasingly used to meet deadlines, raising costs and straining logistics. Permanent removal from circulation. Industrial silver, unlike speculative paper contracts, doesn't return. This industrial demand creates a structural market shift. While Western traders focus on paper silver and ETFs, the physical silver market is tightening. And the pressure is only increasing as India's solar, EV, and high-tech industries expand. Let's take a closer look at solar gigafactories. These facilities are designed to produce hundreds of megawatts of solar panels each year. Each megawatt requires tons of silver, which must be sourced globally. India's strategic approach is to secure this silver upfront before construction is completed, ensuring the factories can operate without supply interruptions. The implications are staggering. Global silver inventories are being reallocated to India. What might seem like a small surge in imports on paper is, in reality, a massive shift in supply dynamics. This is why physical premiums are rising and why COMEX and LBMA data no longer tell the full story. This shift is creating a disconnect between paper prices and physical reality. On paper, prices may remain subdued due to speculative trading. In reality, the physical silver market is experiencing a crisis, one that could have far-reaching consequences for global technology and renewable energy projects. The story of India's industrial silver demand doesn't end with solar. EVs, semiconductors, and 5G networks all compound the pressure on physical supply. Each sector absorbs silver that cannot be recycled or returned to market, accelerating scarcity and driving structural premiums higher. To summarize Part 30, India's solar boom is consuming enormous quantities of silver. Industrial silver demand is permanently removing metal from circulation. Silver premiums in India reflect scarcity and urgency, not speculation. COMEX and LBMA charts do not capture this physical shift, creating a misleading view for paper traders. EVs, semiconductors, and 5G infrastructure add layers of industrial pressure, compounding supply constraints. In the next part, we'll explore India's strategic stockpiling and supply chain dynamics, revealing how vaults are being emptied, lease rates are spiking, and why the world could be facing a structural silver crisis in the coming years. Stay tuned. The forces we've uncovered, cultural and industrial demand, are only the beginning of a story that is reshaping global silver markets in real time. So far, we've seen how India's wedding economy and industrial boom are consuming massive amounts of silver. But there is a third, less obvious driver behind India's silver dominance: strategic stockpiling. This is not about speculation. This is preemptive supply security, a deliberate move to secure silver before shortages can disrupt industry and culture. And the scale of these operations is unprecedented in modern history. India is importing silver at rates that are draining global vaults. LBMA vaults in London, which have long been a cornerstone of physical silver liquidity, are being emptied to meet demand. COMEX inventories are under pressure. Lease rates are spiking, and yet much of the world remains unaware of the structural shift unfolding. The mechanics of this stockpiling are fascinating. India's strategy involves direct imports, purchasing silver from producers in Mexico, Peru, Australia, and Russia, often well above spot prices. Air freight for speed. Standard shipping is too slow for urgent industrial and wedding demand, so air freight is increasingly used despite extreme costs. Vault storage. Once silver reaches India, it's stored securely in local vaults, ready for manufacturing or ceremonial use. Industrial allocation. Portions of this stockpile are directly allocated to solar panel production, EV manufacturing, and semiconductors, removing them from secondary markets. Let's take a moment to consider the global implications. When silver leaves London or COMEX vaults and enters India, it effectively reduces the pool of available metal for other countries. This creates a cascading effect. Premiums rise as demand outpaces supply. Lease rates spike as lenders require higher compensation for lending silver. Physical shortages appear even when paper markets indicate stability. The disconnect between paper and physical silver becomes glaring. Western traders continue to focus on futures and ETFs, often oblivious to the reality physical silver is rapidly disappearing from circulation. Why does India prioritize stockpiling? The reasons are strategic. Industrial security. Solar gigafactories and high-tech industries require uninterrupted supply. Cultural continuity. Weddings and festivals depend on ready availability. Inflation hedge. Silver acts as a store of value in times of economic uncertainty. Geopolitical leverage controlling a significant portion of global silver gives India influence over supply chains. The scale of this stockpiling is staggering. Recent reports suggest India may have secured more than half of the silver available for immediate global distribution. This isn't speculation, it's a calculated move to ensure domestic demand is met before prices spiral out of control. Let's talk about supply chain mechanics. Traditionally, silver moves through a combination of mines, refiners, vaults, and distributors. India's approach cuts out intermediaries, buying directly from producers or major wholesalers. By reducing the number of middlemen, India ensures speed, security, and priority allocation. Air freight, although expensive, is increasingly preferred. While shipping by sea can take weeks or months, air freight delivers silver in days, allowing India to meet urgent wedding or industrial deadlines. The cost is high, but in India's calculation, missing deadlines is far more expensive. This aggressive supply chain strategy is putting pressure on global prices. Physical premiums in India are routinely 10–18% above international spot prices, a reflection of scarcity urgency and willingness to pay for certainty. Meanwhile, COMEX and LBMA reports still show standard inventories, giving paper traders a false sense of stability. The stockpiling also impacts lease rates. Silver leasing, essentially lending silver to traders or industrial users, has become more expensive because lenders know physical metal is in short supply. Lease rates have spiked, sometimes to levels not seen in decades. This creates a feedback loop. Higher lease rates key more costs for physical silver users. Higher premiums key increased stockpiling urgency. Reduced circulation key tighter supply globally. Another critical component is the permanent removal of silver from global circulation. Weddings consume silver, industrial production consumes silver, and once the metal is incorporated into products, it cannot easily return to the market. This creates a structural deficit. Even if mines increase production, replenishing the circulating supply is extremely difficult. Let's pause to consider the long-term implications. Global tech supply chains are increasingly dependent on silver. Any disruption in supply could affect EV production, solar panel manufacturing, and semiconductor fabrication. Premiums and scarcity will continue to rise, particularly in regions outside India that rely on imports. Paper prices vis physical prices will diverge further, creating confusion for investors and market participants. Vault inventories worldwide will continue to fall, making physical silver progressively harder to access. In short, India's strategic stockpiling is not just a market trend, it's a market-altering force. By controlling physical supply, India ensures domestic stability while unintentionally creating global supply pressure. To summarize Part 40, India is aggressively stockpiling silver to secure industrial and cultural needs. LBMA and COMEX vaults are being drained, reflecting a shift in physical allocation. Air freight and direct imports ensure speed and priority, despite high costs. Lease rates and premiums are spiking, highlighting structural scarcity. Silver consumed in India is permanently removed from circulation, creating a long-term market deficit. In the next part, we'll explore the disconnect between paper silver and physical reality, revealing why markets in the West may underestimate the severity of the supply crisis. We'll also discuss how investors and industries can interpret these signals. The story of India's silver surge is not just about demand, it's about control, strategy, and permanence, forces that will shape the global market for years to come. So far, we've explored India's wedding-driven demand, its industrial silver boom, and strategic stockpiling. But there is a critical layer to this story that most market participants overlook: the disconnect between paper silver and physical silver. To understand the stakes, we first need to define the difference. Paper silver refers to financial instruments that represent silver but are not the metal itself. This includes futures contracts, ETFs, and other derivatives traded on exchanges like COMEX in New York or the LBMA in London. These instruments allow traders to speculate, hedge, or gain exposure to silver prices without physically holding it. Physical silver, on the other hand, is the actual metal, coins, bars, and industrial-grade silver that can be melted, manufactured, and removed from circulation. This is the silver that powers solar panels, EVs, semiconductors, and fulfills the cultural demand in India. Here's the problem: the paper market often signals stability, even when the physical market is under extreme stress. Prices on COMEX may fluctuate only a few percent, while physical premiums in India can spike 15–18% or more above international spot prices. This disconnect occurs for several reasons. Leverage in paper markets. 1 ounce of silver in the COMEX system can represent hundreds of dollars of speculative contracts, far exceeding the actual physical metal available. Delayed reporting. COMEX and LBMA inventories may not reflect real-time withdrawals for industrial or cultural consumption. Geographic concentration. Physical silver is being shipped to India, China, and other consuming nations, removing it from Western vaults, yet paper contracts continue trading as if the supply is unlimited. The result is what analysts call a structural disconnect. Paper prices may suggest calm, while the physical market is under intense pressure. This is not a temporary anomaly, it's a persistent condition caused by the permanent removal of silver from circulation. Let's look at an example. In India, physical silver premiums often reach up to 18% above spot prices, especially during wedding and festival seasons. Meanwhile, COMEX silver may be trading near multi-year lows, giving the impression of market stability. For investors who rely solely on paper markets, this creates a false sense of security. They may see stagnant or falling prices and assume supply is abundant. In reality, physical supply is tightening, and premiums are rising where real demand exists. Another factor driving this disconnect is lease rates. Physical silver can be leased for short-term industrial use or trading, but when inventories are tight, lenders demand higher compensation. Lease rates have spiked in recent months, signaling stress in the physical market that is invisible to paper traders. Let's break down why this matters globally. Industrial production factories in India, China, and elsewhere require physical silver. Delays or shortages can slow production of solar panels, EVs, and semiconductors. Cultural detractors. Weddings and festivals in India create urgent, non-negotiable demand for silver, adding further stress to physical markets. Investment signals. Paper traders may misinterpret market signals, underestimating scarcity, leading to sudden price shocks when physical realities catch up. To quantify this, consider India's premiums relative to spot prices. Silver spot price on COMEX 25 goes. Physical premium in India 28 at 29 goes. Effective cost increase 12 to 18%. This spread exists because physical metal is scarce, not because traders are speculating. And this gap is widening over time, particularly as India's industrial and cultural demand grows. Meanwhile, in Western markets, paper-silver trading volumes are enormous, sometimes hundreds of times the physical volume available. This creates the illusion of liquidity. Futures contracts can be bought and sold dozens of times before any physical delivery is required. In contrast, physical silver cannot be duplicated or created on demand. This is why experts warn about the structural mismatch between paper and physical markets. When real-world demand spikes, as it is in India, paper prices may lag, while physical prices skyrocket. Investors, industrial planners, and governments need to understand this divergence. Those who rely solely on paper markets may be caught off guard by rising premiums, reduced availability, and supply chain disruptions. Physical monitoring, tracking vault inventories, shipping flows, and industrial consumption is now more important than ever. Another key factor: permanence of removal. Physical silver in India isn't sitting idle in vaults. It's melted into jewelry, incorporated into solar panels, used in EVs and semiconductors. Once this happens, the silver cannot easily return to global circulation. This differs fundamentally from paper silver, which can be created or traded without any physical transfer. The implications are clear. Physical silver markets are tightening, especially in India. Premiums reflect real scarcity, not speculation. Paper markets may misrepresent supply, misleading investors. Industrial and cultural demand will continue to grow, widening the disconnect. In summary, Part 5 reveals the essential lesson. Paper silver and physical silver are not interchangeable. Ignoring physical supply leads to mispricing, misjudged risk, and potential market shocks. India's demand highlights this disconnect, showing how structural shortages can exist even when paper prices appear stable. In the next part, we will explore case studies and global consequences, the industries, technologies, and supply chains at risk, and what this means for the world heading into 2026. So far, we've explored India's cultural and industrial silver demand, strategic stockpiling, and the growing disconnect between paper and physical silver. Now, we turn to the real-world impact, the industries, technologies, and economies affected by this surge. Case study: Wenteen Solar Energy and Renewable Power. India's solar boom is not just an ambitious energy project, it's a global silver consumption event. Every solar panel requires roughly 20 grams of silver, used in the photovoltaic cells that convert sunlight into electricity. Multiply that by millions of panels, and the numbers become staggering. Example: a gigafactory producing 1 million panels annually consumes nearly 20 tons of silver per year. India now has dozens of such factories in planning or construction, meaning hundreds of tons of silver are required annually. Impact: mines and refiners in Mexico, Peru, and Australia are feeling the pressure. Production must be prioritized for India, leaving other markets undersupplied. Premiums: physical silver in India trades at up to 18% above spot prices, reflecting the urgency and scarcity. The global consequence is clear: solar projects outside India may face delays or higher costs. As silver supply is diverted, investors in renewable energy need to account for metal availability, not just project funding. Case study: 20 electric vehicles. Silver is essential in EVs used in batteries, motors, and electrical systems. As India ramps up both production and adoption, EV manufacturers are competing for the same silver supply that traditional industrial sectors and weddings demand. Example: a mid-sized EV uses roughly 25-30 grams of silver per vehicle. Multiply by projected sales in India, and that's hundreds of tons annually. Impact: global EV supply chains may be disrupted if India continues to absorb such volumes. Premiums: manufacturers outside India may pay higher prices or face delivery delays. This illustrates a fundamental truth. Silver is no longer just a financial asset, it is industrial infrastructure. Shortages have real consequences for green technology and transportation. Case study: 30 semiconductor and high-tech industries. Silver is critical in semiconductor fabrication and AI data centers. It is used in conductive wiring, switches, and circuit boards. As India expands its technology sector, this demand is permanently removing silver from the global supply chain. Example, an AI server rack contains significant silver-based components. Scaling these technologies globally requires tons of silver. Impact: supply constraints could increase production costs, slow innovation, and even delay deployment of next-generation technology. This case demonstrates how industrial demand extends beyond India, affecting global innovation and technology adoption. Case study: foreign cultural and wedding markets. India's wedding season alone accounts for hundreds of millions of ounces of silver demand annually. Families purchase jewelry, coins, and ritual items, which are then melted and incorporated into products that will not return to the market. Impact: this creates a permanent reduction in global silver circulation. Premiums: during peak wedding seasons, physical silver prices in India spike dramatically above international spot rates. The combination of industrial and cultural demand creates dual pressures, making India's market one of the most important drivers of physical silver scarcity in the world. Global consequences: the surge in India's silver consumption has far-reaching effects. Vault depletion: LBMA and COMEX vaults are being drained, reducing physical liquidity globally. Rising premiums: physical silver trades at significant premiums in India, and these premiums increasingly affect global pricing. Industrial bottlenecks: factories producing solar panels, EVs, and semiconductors outside India may face delays or higher costs due to diverted supply. Investment risk: paper silver markets fail to capture physical scarcity, creating potential shocks for investors who rely solely on futures and ETFs. Long-term structural deficit: with much of India's silver permanently consumed, the global market faces a structural reduction in available metal, not a temporary blip. Let's visualize this. Imagine hundreds of millions of ounces of silver leaving global vaults each year and entering India. Once melted into panels, coins, and industrial components, this silver cannot return for decades. Meanwhile, paper traders continue buying and selling contracts, oblivious to the physical shortage. The result is a world where paper prices may remain flat or misleading, even as physical markets are under extreme stress. This divergence poses risks not just for investors, but for industries dependent on silver for production, governments monitoring supply, and consumers of renewable and high-tech products worldwide. Scenario analysis heading into 2026. Industry experts warn that 2026 could be a breaking point for global silver markets. Industrial expansion, solar, EV, semiconductor, and AI growth continues to accelerate. Cultural demand: weddings and festivals maintain or increase silver consumption. Vault inventories: COMEX and LBMA inventories are declining, limiting physical availability. Premiums: physical silver premiums in India and other consuming countries could spike further, impacting global pricing. Paper vs. physical: the divergence will create market confusion, sudden price shocks, and potential liquidity crisis. The global silver market is at a crossroads. Those who ignore physical realities may be blindsided. Those who understand the dual pressures, cultural and industrial, will gain insight into the true dynamics shaping the world's most critical industrial metal. Summary of Part 6e. India's silver surge impacts solar, EV, semiconductors, and weddings, permanently removing metal from circulation. Physical silver premiums in India signal real scarcity, often ignored by paper markets. Global supply chains face potential delays and cost increases. Vaults worldwide are being drained, tightening physical liquidity. 2026 could mark a breaking point, with structural deficits and price shocks. In the next and final part, we'll explore forecasting and conclusion, what this all means for the future of silver, global markets, and investors. We'll look at strategies, risks, and the long-term implications of India's silver surge. We have reached the final chapter in our story, a story of India's silver surge and its implications for the global silver market. From weddings to solar panels, from EVs to semiconductors, India's demand has reshaped supply chains, vault inventories, and market dynamics. Now, we ask the ultimate question: what does the future hold? 1. Forecasting silver demand in India. India's silver consumption shows no signs of slowing. In fact, analysts predict continued growth across multiple sectors. Cultural demand: weddings, festivals, and rituals will remain a constant driver, with demand peaking seasonally but overall growing year by year. Industrial demand: solar energy, EVs, semiconductors, and 5G infrastructure are projected to increase exponentially, consuming hundreds of additional tons annually. Strategic stockpiling: India is expected to continue purchasing silver, prioritizing domestic needs over international market availability. If current trends continue, India could absorb well over 50% of the globally tradable silver supply by the end of the decade. This has major implications for pricing, premiums, and global industrial planning. 2. Global market implications. The implications of India's silver dominance are profound. A. Vault depletion. LBMA and COMEX vaults are declining as silver is diverted to India. Fewer physical ounces remain available for industrial or speculative purposes outside India. B. Rising physical premiums. India's premiums, now 10–18% above international spot, may increase further. Other countries importing silver may face similar cost pressures as supply tightens. C. Paper vs. physical disconnect. Futures contracts, ETFs, and paper markets will continue trading at levels that may not reflect actual physical scarcity. This divergence creates risk for investors relying solely on paper markets. D. Industrial supply constraints. Solar panels, EVs, semiconductors, and 5G infrastructure may face delays or increased costs if silver supply is constrained. Companies dependent on silver for production will need to adjust sourcing strategies or pay higher premiums. 3. Scenario analysis for 2026 and beyond. Experts warn that 2026 could be a breaking point for the global silver market. Let's explore 3 possible scenarios. Scenario C: controlled supply and gradual price adjustment. Silver production increases slightly, partially offsetting demand. Premiums remain high but manageable. Industrial production continues with minor cost adjustments. Scenario 2 is a physical supply crisis. Vault inventories drop below critical thresholds. Physical premiums in India surge above 20%. Delays in solar, EV, and semiconductor production occur. Paper silver prices lag, misleading global investors and triggering sudden market corrections. Scenario 13, structural deficit and long-term market rebalancing. India permanently removes vast quantities of silver from circulation. Global shortages force higher premiums worldwide. Long-term production adjustments occur, with mining and recycling ramping up slowly. Industries and governments adapt, but at a cost to global supply chains. 4. Lessons for investors and industry. A. Monitor physical supply, not just paper. Paper silver prices can be misleading. Vault inventories, shipping flows, and industrial consumption provide a clearer picture of real market dynamics. B. Understand regional demand drivers. India's wedding culture and industrial expansion are key drivers of global silver scarcity. Other emerging markets may follow similar patterns, increasing long-term risk. C. Prepare for premium volatility. Physical silver premiums will likely remain elevated, especially in consuming nations. Industrial users must factor premiums and supply timing into budgets and planning. D. Consider strategic sourcing and stockpiling. Companies dependent on silver for production may need to secure supply in advance. Diversifying sourcing regions or investing in recycling technologies can mitigate risk. 5. Structural market insights. India's silver surge has revealed a fundamental truth: physical metal drives real market outcomes. Paper instruments may influence sentiment, but the actual movement of silver determines production, pricing, and availability. Key takeaways. Physical silver is being permanently removed from circulation in India. Industrial and cultural demand are dual forces driving structural scarcity. Premiums in physical markets are more reliable indicators of supply pressure than paper prices. 2026 and beyond may witness critical shortages if production and recycling do not scale rapidly. Investors, industries, and governments must track real supply metrics to avoid miscalculations. 6. Strategic implications for global supply chains. Renewable energy solar projects may face cost overruns or delays due to silver scarcity. Electric vehicles manufacturers may compete for the same physical silver, raising costs. High-tech industry, semiconductor, and AI production could be affected by constrained supply. Investment strategy. Traditional paper market indicators may fail to signal risk. Physical supply monitoring is essential. 7. Final thoughts: a market in transformation. India's silver demand is reshaping the world's most critical industrial and cultural markets. What once was considered a precious metal for jewelry and investment is now an essential component of modern infrastructure. By understanding the forces at play, weddings, solar expansion, EVs, semiconductors, and strategic stockpiling, we can see why physical silver premiums are rising, vaults are emptying, and the global market is tightening. The key lesson for investors, industry leaders, and policymakers is clear: follow the physical metal, not the paper price. Because the real story of silver is happening in warehouses, factories, and markets, not just on a trading screen. As we approach 2026, the global silver market may face a breaking point. Those who understand and anticipate the dual forces of cultural and industrial demand will navigate this landscape successfully. Those who rely solely on paper prices risk being caught off guard by rising premiums, reduced availability, and supply chain shocks. Closing summary. India's wedding and industrial demand is permanently absorbing silver. Physical silver premiums are signaling true scarcity. Paper markets may mislead investors, creating potential shocks. Vaults are being depleted and global supply chains face stress across multiple industries. 2026 is a critical year. The market may experience structural adjustments, price spikes, and industrial impacts. Voiceover closing line. Silver is no longer just a precious metal. It is the lifeblood of technology, culture, and industry. And as India secures its supply, the rest of the world must ask itself, are you watching the paper price or the physical reality?